Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it was another whipsaw session for the Australian dollar as it weakened further after the break of 65.30, which has now exposed the next level, that's 64.75, pushing the market extremely oversold and with the ADX overheating, which is a little bit concerning because the fact is the market could snap to the upside if we get a rejection from the level of 64.75 and possibly seeing a break of 65.25, which should fuel the move to 65.65 and on to 66 cents. I still feel the market is way overextended considering the rejection from 68 cents, so therefore a correction is due and likely or maybe from 64.75. In economic data, the Australian Bureau of Statistics reported on Wednesday that the CPI grew in Australia by 3.8% year on year, which was in line with expectations and up from 3.6 in the Q1, which was in line with expectations and up from 3.6. Underlying inflation, excluding volatile items, fell to 3.9% from 4%, while quarter-on-quarter CPI inflation grew by 1%, and the core CPI inflation rose by 0.8%, below expectations of 1%. As expected, though, the monthly CPI indicator for June showed inflation falling to 3.8 from 4%. Despite the Q2 increase, cooling inflation signs were evident, especially in the drop in underlying inflation. Meanwhile, investors are gearing up for the US Federal Reserve's two-day policy meeting, which began on Tuesday. The Fed is expected to hold rates steady, with borrowing costs at a 23-year high of 5.25 to 5.5 since July 2023. With that said, global markets anticipate a slight chance of a 25 base point rate cut tomorrow when the Fed meet, but widely expectations suggest a potential rate cut in September. So still keep an eye very closely as the market will be very whipsawed. And following that, Fed Chairman Jerome Powell's press conference will be held 30 minutes after the announcement and will be closely watched during the Q&A session. The dollar index, which measures the greenback strength against a basket of six major currencies, slipped from 104.55 to 104.35. This has given a little bit of momentum for the euro as it now looks towards the level of 108.55, which could be breached and see a move on towards the region of 109.0525 to 110 figure 10. Any pullback, I see the support presently at 107.65.70. A very whipsaw price action, and with the Japanese candlestick hammer being negated, given the fact that we've got a huge engulfing candle or bearish outside range day, that could put further pressure to the downside and look towards its given call at the moment at 150.5. In light of how the market rejected the top side of 154.55, which would have confirmed the bullish hammer, the market is now posing further threat to the downside. Let's see if the market can reach the 150, 50.75 before any turnaround. Also note, traders should closely monitor signals and adjust their risk management strategies given how whipsaw this market is. A Super Thursday just around the corner, the Bank of England, along with that with the Fed, will impact the British pound. And no doubt the market is attempting to recover as the technicals are firming up. And if so, a break above 129.15 could be the ticket on towards 129.60.65 to 130.20.25. Still take note though, the base is holding around 127.45, so we could see a little bit more whipsaw price action and then a move on towards its topside destination. A good round of demand for gold as it breaks through the level of 2,400 and now set to go higher, I believe, from the technicals breaking higher through the RSI midway point. Once we get the MACD marrying up, we may see a little bit more to the firmness, but overall, with the break above that 2,400, now looks towards 2,418 to 20 to 2,432 to 36 and reassess from there. Any pullback, I see support around 2,396. And like with all markets, due to the high volatility, traders should closely monitor signals and adjust their risk management strategies accordingly, as the market is no doubt going to be a little bit more to the whipsaw side given the risk events into this week. And we've still got the non-farm payrolls on Friday. Wrapping up with oil, the market's nearly reached its downside target of $73.7085, even though there has been a little bit to the bullish side when it comes to divergence. Nevertheless, the ADX is overheating, so I feel we could get a correction from there and see a bounce back towards $76 a barrel or on towards 78 and reassess from there. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the day.